Hopefully you guys are doing good this morning. Just give me just a second to get this out of my way because it's right in the view of these daggone big screens. It's the only way I can do it without looking like a freak. It's just, I got a little gadget over here that I can move it away and I can actually see what I'm supposed to be doing. All right, so you should see a slide that says no bullshit guaranteed. Does everybody see NBSG on your screen right there? I think this is the best disclaimer in the business. When I ran it past my lawyer, I don't see that they do. Oh, you do see it? Okay, cool. All right, so no bullshit guarantee. I think it's the best disclaimer in the business. I ran it past my legal team, and they're like, yeah, you shouldn't have any problems with that whatsoever. So as opposed to, pussyfooting around the issue and stuff, I cannot and I will not make you any guarantee whatsoever of any kind. There is no such thing as a guarantee in any financial markets that I've ever been a part of. Okay. My results are not typical. Also, I do not verify testimonials that people send me via emails. So you should also consider their performance results also as non-typical. Most people lose money trading and investing. And then I used to be registered, so I like to still pretend I'm registered just because it covers you a little bit better. You should never trade more money than you can afford to lose. Past performance is not indicative of future returns. It's just a fancy way of going, look, just because I made money yesterday does not mean I will make it tomorrow. If you understand the warning disclaimer that I just made you aware of, give me a number 21 in the chat box. And that just lets me know that all my gear is working and you guys understand and you're adults and you understand that this is called speculation, folks. This is not called guaranteed wealth generation with zero risk. That's not what this is called. Same way they don't call fishing catching, right? Because sometimes you go fishing, you don't catch shit. All right, cool. Well, let's get started here. You know what I got on here? I got the wrong PowerPoint. That's going to be awesome to share with you. Except that's not the one I want to use. So give me just a second here. I thought I was all prepared.
That's why I'm here for you right now, Hubert. I'm here for you in these moments where you're awesome. Doing stupid shit over there. Wrong thing.
I got it. I just had too many PowerPoints. I'm solid now. Now you should see a one-eyed dog, right? A one-eyed dog.
I see the dog. You are clear for takeoff.
Thank you. Anybody ever seen a three-legged dog? You guys know how that happens? It's called FOMO. Like you the fear of missing out, and you aggressively pursue, which is also another name for chase the markets. And then what happens is they get ran over, and then in the old career I used to have, they'd bring them in. We'd have to operate on their legs and go, oh, let me guess, it's chasing cars. So don't do that, all right? So we've already covered that. I have a no BS approach to trading and investing, whether it's in the stock market or investing in startups. It's not because I'm smarter than anybody else, because heads up, I'm not. I'm average. I'm not the smartest guy in the room, and I'm not the dumbest guy in the room in most rooms that I'm in, but I'm better than some, but not as good as others, right? So I'm average, just like you are probably average. When I was growing up in the hills of Eastern Kentucky, I didn't have a ton of really good role models for success. One good thing I did have is hardworking parents that worked at a factory called American Standard. You've seen their fittings, their plumbing fixtures, their commodes, their sinks, all that good stuff. So factory workers were my parents. And I went there and worked 2 summers. I hated it just because they wouldn't let you improve anything. It's like, do this and do that. I'm like, we can make this so much more efficient. Now, I could have went into the coal mining profession. I decided not to do that because I didn't want to be underground 8 hours a day around water and electricity underground. I was like, nope, not doing it. And then there was also a couple other industries that were hopping back in the day in Eastern Kentucky. One of them was the good old-fashioned marijuana business. Back in the day, we'd call it weed. You could either grow it or distribute it. There was also good old-fashioned meth labs. You could either cook it or you could be in distribution or sales. Or you could be in the good old-fashioned moonshine business. You could either produce it or you can distribute it. I decided if I was going to do any of these 3, I would try to be good at them, and then I would probably end up in the federal penitentiary fighting Bubba over who gets the top bunk and who gets the bottom bunk. So I decided not to go in that route. Now, when I was about 17, I left Eastern Kentucky to go to pursue and figure out how to make either cash flow or wealth. And back in the day, I didn't know there was the thing called wealth. I just thought, I just want to make some money, right? So what I would do, all these pictures up here that I've got in front of your face, I either paid these people to be their apprentice, or I gave money to their charity to talk to them for an hour and a half, or we exchanged or bartered services. I helped them, they helped me, type of thing. And believe it or not, you can do the same thing. All you got to do is just be a little bit aggressive. And most people that are successful want to help other people be successful. Now, they're not going to hold your hand the whole way, right? They're going to say, hey, here's what I did. So what I found is there was 3 really good ways to generate either cash flow or wealth, and in no particular order here, but most of them either owned or operated their own business or they invested in other businesses. Most of them either traded or TRADE, can't spell this morning, or they would invest in the markets. And some of them owned real estate. I think you should have all 3. I think you should own a business or you should invest in a business. I think you should either trade or invest in the markets. And I think you should own a home or a multifamily dwelling that you rent out. But those are the best ways that I figured out how to make money. So what we're going to talk about today, and if you're a huge fan of technical analysis, you're really going to like this. So really, I want to take a little informal poll here. Are you more into fundamental analysis? Are you into technical analysis, or do you do both? I'm more of a technical guy. I will dabble every now and then in the fundamentals if I'm holding something longer term. I've never seen anybody make a ton of money just doing fundamental analysis. So I reckon that you should at least couple your fundamental analysis with some technicals. So we're going to have fun. If you're in the technical analysis, let's talk about what this works on. Number one, I don't have an indicator to sell you, okay? The indicator that I'm about to share with you on the proper use of it is called Ichimoku. It's freely available on all the good platforms out there, okay? What does it work on? It works on stocks. It works on options. It works on futures, forex, bonds, gold, commodities, and it works on cryptos. So it works on a lot of stuff. It doesn't work on everything, which I'm about to show you. So these are the, now let's talk about the time frames too. Are you more of a day trader? Are you more of a swing trader? Or are you doing more long-term investing? Which is your favorite? So as I'm doing these questions right here, what are you? Do you trade more stocks, options, futures, bonds, gold, commodities, cryptos? Which one is your favorite flavor there, in other words? And then also, Chu says he's a swinger. Congratulations, Chu. Or are you more of a day trader? Are you more of a swing trader? Or are you more of an investor? All right, so we got a good mix of people here. So because they're all over the place. Day, swing, forex, long-term, so all 3. Okay, cool. All right, this is the S&P 500 results in the last 5 years when I originally did this study, all right? Stocks in the S&P 500 index, it worked on 430 out of 500. So like I said, it works on a lot of things, not everything, but it is pretty broad in its application, 86%. Now, that means if you would have taken every single signal, if you'd have taken the long and then the short and then the long and then the long and then the short, your return would have been 33%. If you remove the counter trend signals and wait for a 3-day or a 3-bar confirmation, you can increase your return from 33% to 79%. That's just a fancy way of saying, look, if you got a big old massive uptrend like that, don't short that thing until you get a break of the trend line. On this one, just go long and don't do the shorts. Like, don't do the counter trend trades where you're short here and you cover here. Do the trades where you're long and long and long and long until the trend line gets broken, okay? It was also profitable on 29 currencies over the last 10 years. You did have to use a multi-time frame analysis approach in order to make that work. Here is the secret recipe. Daily, hourly, and 10-minute is the special blends of herbs and spices that I like to use. Your mileage is going to vary. You can either go longer than that or you can go shorter than that. But those are the time frames that I like to use with this, and it works really well for me. All right. Time frame selection. This is the most important slide in my presentation, so pay attention to the screen right now. If we look at this column, so this is a column, so column 1, 2, God, I can't write this morning, 2, 3, 4, 5, 6, 7, 8, and this is supposed to be 2. And then we're going to go row A, B, and C. All right, so if we look right here at daily, if I'm looking at a daily chart, then I know that I'm probably going to be in this trade for at least 2 weeks. So it says weeks, that means more than 2, okay? So the cloud is going to extend 20 bars to the right. So if I'm looking at a daily chart, I should be willing to hold this trade for a minimum of a couple of weeks, sometimes substantially longer, and in some cases you're going to get stopped out too. If I'm looking at an hourly chart, 60 minutes, then I should be willing to stay in that trade for days. The minimum would be 3 days. It can be higher or substantially or lower, depending on how tight your stop loss is. And then if I'm looking at a 10-minute time frame, I know I'm looking to stay in that trade for about 4 hours. Now I can stay longer if it develops into something that looks like it's got some really good potential. And then you can also go lower time frames all the way from 5 minute down to 1 minute down to ticks, or you can go weekly, monthly, and 3 months, and you can even go yearly charts on these things. Okay. But this is the formula I like to use: daily, hourly, and 10-minute. Does everybody understand the concept of time frame selection? If I'm looking at a 60-minute chart, that signal is going to be good for me for 3 days minimum, or I'll get stopped out, right? Because not all this stuff works all the time. All right. If I'm looking at a 10-minute chart, I know I'm going to be in that thing for at least 3 or 4 hours. Okay. So this is how you can fix the problem of the time frames not syncing up. So if you had a daily long signal, but you had a 10-minute sell signal, well, intraday I could short that, but for longer term I'd want to go long that. All right. And then you can say, hey, the daily is the upside, but the hourly is to the downside. I'm like, okay, so it's going to sell off for 3 days. That's how you fix the conflict in your head on what time frame to trade. You have to say, hey, how long am I going to hold this thing for? Do I want to hold it for 2 seconds, 2 days, or 2 weeks? All right. This is what you want. Is the number one technique used in a top selling book in Japan. And it's going to make it so as soon as you look at the chart, it's going to look initially a little busy to your eyes if you're not used to reading it the correct way, but it is designed to produce really clear-cut signals. It translated, Ichimoku means at a glance. All right. So you should know within less than 3 seconds, this market's going up, it's going down, and it's going sideways. Here's a little tip for you. If it's going up, you want to get long. If it's going down, you want to get short. If it's going sideways, you want to leave it the hell alone. Okay. All right. So edge for you now. It's going to tell you what happened in the past, present, and future. There's not a ton of really good free indicators that'll do this. The cloud will do it. They'll do the future. Tons of indicators will do past and present. Not a ton will do future. Elliott Wave will do it. Weiskopf will do it, and Fibonacci's will do it. By far, the easiest one to learn is the cloud at first. The other ones are decent too. They just require more training and time to kind of get really good at them. All right. Does everybody have a black chart with a blue squiggly ribbon on a chart and some price action above it? We're going to learn the concepts of how to correctly use this creature. All right. So the blue thing, everybody type in your chat box, is called the cloud. CLOUD. All right. If the price action is above the blue thingy called the cloud, then you want to be long. If the price action is below the blue thingy, which will turn red, you want to be or get short. This is going to act like a real-time support area, and it's either going to be a nice little spongy one or a fluffy one, or it'll be a bouncy one, right? Kind of sounds weird, right? Nice little fluffy cloud, mini trampoline, trying to figure out if it's going to go lower. Fluffy little cloud, mini trampoline, mini trampoline, mini trampoline. Now, the future prediction algorithm of this thing is telling you, hey, I'm going sideways to slightly higher. If it sells off, I'll catch you here. So that's the first thing, cloud. The second thing is called the turning line, and it's like a moving average. It's slightly different, all right? It's not a moving average. It's a midpoint average. But what you're looking for, I call this the fast, and it's called the turning line. So everybody type in the word turn. So we've got cloud, CLOUD, we've got turn, and this is the fast support and resistance. And a lot of times it'll come down here and smack it, kiss it, and launch back off of it. And then when the fast or the turning line does not hold, usually what you'll get is the standard line. Okay. So I've got cloud, CLOUD. You got turning line, turn, and now we have the STD. So everybody type in STD for standard line. And if you're wondering what these are, this is a 9, this is a 26, this is a future predicting from the price action. What'll happen is if the yellow gets broken, it'll go to the purple, and then it'll bounce off the purple and give you a slingshot trade. When the yellow and the purple both get violated, it will then go either to the top of the cloud or the bottom of the cloud. If that doesn't hold, it'll then trade 1, 2, or 3 bars or more below the cloud, which then you get a short setup and you no longer have to stay or be long. And then the last line is called the lagging line, LAG. This is the standard, STD. This is the that's the turn, TURN, and this is the STD, and then this is the cloud. The lagging line is just telling you what happened in the past. So here's why this indicator is so powerful for a free indicator. This is what happened in the past. This is what's happening right now, and this is what's going to happen in the future probably. Does that make sense? Pretty simple after you break it down. Initially, it's going to look a little busy, and you're like, man, that's a lot of stuff to look at, dude. I don't know if I can handle that. But if you break it down in its components, it's fairly easy to use. Now, we're going to do a little quiz here. Now, this one is the turning line is the midpoint calculation where you take the high and the low of the last 9 bars. So the turning line, this is the same thing. This is the cloud, above the cloud long, below the cloud short, overhead resistance. This is the cloud. That's the turning line. This is the standard line, and that is the lagging line. So how this is calculated is you take today's price action and you count back 9 bars, or if it's intraday, if this is a 5-minute bar, you just count back 9 bars. You locate the low, you locate the high in that range from those 9 bars, and you go high plus low divided by 2 equals X. Now, my algebra teachers in high school are probably rolling over in their graves. I got D pluses in algebra. I got a passing grade, not barely. But anyway, so how you work this math is you go 465 plus 434 divided by 2 equals 450.07. That number on every platform is just going to be calculated for you. I know there's some doctors and some engineers in here. If I don't tell them how to calculate it, they'll pop a gasket. So I don't want to pop a gasket on them this early in the morning. So I explain how it is calculated. From here on out, just know that that's how that is done. All right. So if we look at this going forward, as far as a technique to trade through, the standard line is the same math. It's instead of 9 bars, it's 26. Okay. So in this case scenario, we know we're coming from below the cloud. So we're bearish. It comes up here, overhead resistance, and we go, okay, if it breaks the turning line right here, we're going to short it at 450.07. Target 1 will be right here. Target 2 will be right here. And target 3 will be right there. Now, in this case scenario, it's probably going to bounce off of here and go in the opposite direction. The reason I know that is because we went from a red cloud to a blue cloud, which is telling you, hey, I'm going to pull back. This is probably going to act as support because I'm about to bounce off of here because this is telling me I want to go sideways to slightly higher at about a 45-degree angle. So the price action is probably going to go something like that right there. Okay. Now, cloud span A's and B's are fairly easy to calculate. Software just does it for you if I've already got it on there. All it's doing is it's taking the turning line and the mid and the standard line. It's looking at a midpoint and it's forward projecting in the future 26 bars. Cloud span B is a little bit different, but not much. You're going to take a slice of time from this day, count back 52 bars, which is a whole year, find the midpoint, and forward project in the future 26 bars. So that's how that thing is all made up. Now, the lagging line is slightly different, but it's super simple to understand. What you're going to do is you're going to look at the price action right here, and you're going to zoom in, and you're going to say, oh, the price action shifted back 26 bars will give you that blue line. Now you guys know how they're all calculated. So on Ichimoku cloud charting signals, here are some signals that you need to learn to look out for because they do have really good setups. Lagging line crossing the cloud, slow but super strong. Price crossing the cloud is probably the Goldilocks trade, and that's the one I'm going to share with you today. And it's the easiest one to scan for. It's the easiest one to look for, and it produces some really, really good results. So that's why you start there first. Price in the lagging line touching the cloud could be overhead support and resistance. The cloud spans crossing can give you an early warning system, like, hey, things are starting to change here for you. The turning line and the standard line crossing, we call this an X pattern or a crisscross. It's really good for continuational trades and reversals. So when we look at that, let's take a look at the price crossing the cloud, because this is the first one you're going to look for, okay? So if you got a major uptrend like this, and this is just an old ancient chart of Apple, don't let that freak you out. Look, it says 2012. Don't let that freak you out. I'm going to do all live charts here in just a second. As soon as we get through the framework, I'll spend the rest of the time that I have with you going through and actually scanning the markets and show you how you can do this effectively. So if we have a break below the cloud by 1, 2, or 3 days, 1 is equal your aggressive type, 2 is your kind of medium, and 3 or more would be a conservative setup in my opinion. So we're going to go 3 here. So what you would do is you'd be short around 630 to 620-ish. And then if you get 1, 2, 3 above the cloud, you'd cover around 480-ish. That's not a bad trade, right? Now notice I didn't say you're going to short the dead top and you're going to cover at the dead lows, because heads up, that's not how real trading works. I've been trading for 30 plus years. I think I've done that maybe 4 or 5 times in my life. And it's not by design. It's just like, hey, I got lucky. I got the top tick or the low tick. If you always try to get the low of the markets and the high of the markets, heads up, you're chasing fool's gold. It's damn near impossible to do. So stop it and figure out how to get as much meat off the bone as you can and leave a little bit for somebody else. All right. So that is how you set it up. There are other signals that you can look for. Like I said earlier, there are the lagging line crossing below the cloud. You can also do the lagging line touching the cloud, or the price action touching the cloud, or you can look for the turning line and the standard line crossing. This would be a early warning that we're about to sell off. Notice how the blue changed red, and it's like, uh-oh. So you get a lot of warnings. Hey, I'm about to run out of gas. And then once you've broken down below here, you can then look for a criss and then a cross called the X pattern. Continuation, criss, cross, X pattern. Criss, cross, X pattern. Okay. So that's how you look for it. Now, here are the bullish signals. Price above the cloud. Price in the clouds are bullish if they come from the bullish side. That makes sense, right? The lagging line crossing the cloud is the main signal of trend change. Price crossing the cloud is an earlier but less reliable warning of trend change. Price in the lagging line will often find support at the cloud's edges. Cloud spans crossing may be a sign that the trend is changing. Be on the lookout for thick clouds after a run, which could mean that the trend is about to change on you. Those are the bullish signals. I'm going to pop up the bearish signals here real quick. As soon as you're done reading that, let me know. Just type in the word done. I'm going to get a quick swig of liquid here, and then we're going to go into live charts here and spend the rest of the time scanning the markets. I've already scanned them. I scan them every day after the close to find trades for myself. I'm going to share those with you so that you can place some trades Monday off of the ones that I found. All right. All right. Time frame selection. Once again, my favorites are as follows: daily, hourly, and 10 minutes. Okay. In the course, I cover a tool. It's a free tool called a parabolic SAR. If any of you are suffering from the FOMO economy, where you hear everybody else is getting rich and you're not, it might be because you're doing one of two things wrong. You're either trailing your stops too tight and you're strangling and just choking the death out of your trades, or they're too wide. And a formula like the parabolic SAR as an indicator can help you a lot on the proper way to trail a stop loss for your risk profile. So you need to look into that if you don't know how to use that. All right, let's go to live charts. Discard, please. PowerPoint done. All right, so this is now the cloud. So what we're going to do is I'm going to walk you over and show you what I do every day after the market as soon as it closes. So I just do it in this fashion. So I'm going to pretend you're not here for just a second and just set this up. And now it's set up. Boom. Now we're ready to go. So now looking at this, if I look at Bitcoin futures right now, is Bitcoin futures, is it a long, a short, or a leave me alone? We're not looking at anything else. No trend identification. We're just looking above or below the cloud. Is Bitcoin a long, a short, or a leave me alone? Yeah, it's a short for sure, right? This is a short right here ever since it broke right here. And believe it or not, that's when I told my subscribers, I was like, hey, right here, Bitcoin's getting ready to sell off. Get ready for it. And you can see it's gone down from, 44,000 down to 30-ish thousand dollars. What about Ethereum, which is also another crypto? This is a short. Now, full disclosure, I'm long a bunch of Ethereum, but I'm long at like $68. So this will sell off is not really affecting me much. Okay. And then if you've never traded Bitcoin or Bitcoin futures, I would recommend starting with this contract. It's only 50 cents per tick. It's a neat little instrument to mess with. Now, if we look at the S&P 500, is the S&P 500 a better long or short at this point? And I'm not using the ADX as a trend confirmation right now. I'm just talking about just the core of the cloud. Yeah, it's saying, hey, I'm in a good spot. You should be long here, right? What about the NASDAQ? Yeah, NASDAQ saying I'm going to go higher according to the cloud, and this right here too. See how easy it is? Now, there's other filters that you can apply to it to find even better trade setups. But what I do is I just go in a systematic approach and go, okay, what's the Russell doing? Russell's sideways to slightly higher. What about the Dow? Well, the Dow just fired off, believe it or not, a long signal Thursday and now Friday. So I would write that one down. And then what I would do is I'd come over here and I'd go, okay, I want to put this in my list of long things, which I've already done the hard work for you. So see, that's the first long that you can potentially take on Monday that we've already found for you. And then when you go, all right, well, what's the Bund look like? Well, the Bund's in the cloud, so I'm just going to leave it alone. Because when it's in the cloud, I need it to either be above the cloud or below the cloud. What about the DAX? DAX is kind of sideways. It's above the cloud though. Euro Stoxx 50. It's a better long than short, but a little sideways. What about let's go the 2-year note? Is the 2-year note a long, a short, or a leave me alone? Yeah, it's a short, right? What about the 5-year note? The 5-year is a short too. If you look at the 10-year, the 10-year is, it's a long, but it's trying to roll over. And then if it's the 30-year, the 30-year is still above the cloud. So all of them are below except the 30. I bet all the other small ones will force the 30 over time to come down below the cloud. Now, let's take a look at gold. There might be some gold bugs in here, so cover up your ears. Gold is a sell signal, and gold bugs hate to hear that, but it is actually a sell signal with a target of 1,700. What about copper? So copper was one hell of a run during COVID. Look at this thing. Look at that beautiful trend. You see that right there? I'm going to zoom in on it a little bit. Look at that massive trend. Now, it's a sell signal because it's below the cloud. And then you can look at platinum. Now, you're sitting there going, man, I don't trade half this stuff. Don't worry. I'll get to the stocks here in just a second. Platinum is a sell signal. What about silver? Silver, sell signal. What about crude oil? Crude oil is a long. I can give you one guess. Why did I tell the people that are in our membership to get long back here in the low 40s? It's because crude oil crossed above the cloud on a daily. And I said, hey, it's probably going to go up for the next few weeks. And fortunately for us, it kept on going and going and going and going. Now, you can't hold the futures that long. You're going to have to use USO or some ETF or some oil company in order to do that. But you see how easy you can find really good quality trades by doing this. And I'm going to show you some that I found this week in a service, all right, that I usually, if through another publishing company, they sell for like $1,000. And you guys will be able to get a substantial discount on that today. So let's take a look at lean hogs. Lean hogs is a brand new fresh short. It's been short for 2 to 3 days. So I bet you I came over and said, ooh, lean hogs on the short side. Look at there. Got gold, lean hogs. All right, that's how I'm finding this stuff. And then we go, okay, what about feeder cattle? Feeder cattle is a long. What about live cattle? It's kind of sideways. All right, now let's look at the grains. Look at the massive market you could have been in grains right here. Soybeans. Now they're leave me alone right now, but they're going to set up for either a long or short. You just got to wait on that thing. Corn is a leave me alone. It's in the cloud. Let's take a look at oats. So on oats, it's below the cloud, but it's just kind of going sideways. So I would probably leave that one alone. Rough rice is a hard contract to trade. I just pass on that one for the most part. Soy. Is soy a long, a short, or a leave me alone right now? Super simple. If you know how to read this chart, you know it's going lower, right? That is a great looking short with a target of 1084. What about soy meal? Soy meal's also a short. Once it broke right here, my target was this area. So as soon as it broke right here at 422, we rode it all the way down to 355-ish. All right, what about wheat? Wheat, also a good-looking sell signal. And then we get into the softs. Cotton is in the cloud. That's a pass. Soybeans in the cloud. That's a pass. Cocoa is a short. Probably going to drop down to 2,300. Coffee is a long and about to experience a slingshot trade where it pulls back below the turning and the standard line and then goes back above 158 and it'll sling its shot up to about 180. And then you've got OJ. It's just kind of a little bit of a weird market. I would leave that alone right now. Now, watch how simple this is on TradeStation. And you can do this stuff in Thinkorswim too. You just have to set up the scan properly there. You have to tell TOS to say scan all the stocks that are above the cloud. Then you have to say scan all the stocks that are below the cloud, and it'll spit you out a list of things. I just do it manually because I like doing it manually, but I also have software that will do it automatically for me. I just like getting in the reps. So if I sit right here and I just go like this right here and I just double left click, you can see new below, right? And then I use another filter criteria I want the ADX to be above 20 if possible. That'll let me know that the thing is trending. And here's an example of that. Let's go to let's go at NQ. All right. So in this case scenario, when the NASDAQ is yellow, it's more trending. When it's red, it's more choppy. So I use that as a filter too. So you can look right here, see where it says new below. All right. So and the ADX is above 20. TSCO. Potential short. Not great. It's not bad. And then what I do is go WBA. Decent little short. And then I go AIZ. Look at there. AIZ. Look at that. Nice little new above. That is a beautiful looking buy signal. So then I would say, I like AIZ. I would then come over here and move it to it. And I'd say, hey, AIZ looks like a good long. And I'd say AIZ, good looking long. And then I would compare that to the other ones that I found. I'd say, okay, what's YM look like? YM's a long. What's EXC look like? Long. Foot Locker, long. KMX, long. Nike, long. Oracle, Oracle. PRU, and then AIZ. So how I'm finding those, and I'm sorting by new above the cloud or new below the cloud, and I'm just filtering through them. So then I would come down here and go EXC. I would add that to my new list of long things that I'm probably going to trade next week. Then what about FL, Foot Locker? That's a good looking gap up above the cloud, probably going to go north of 70. KMX, new above the cloud. And then I come down here and go Nike, new above the cloud. That one's a little bit different of a creature, but you can still make that work. And then come over here to O, new, long. Oracle, new, long. So what I do is I then rank these suckers. I put them over here, and I go like this right here. All right, I'm going to go, these are my longs, and these are my shorts. So these are the stuff that you should look at Monday. The Dow as a potential long. EXC as a potential long, Foot Locker, FL, KMX, Nike, Realty Income, Oracle, PRU, and AIZ. The shorts for next week, as early as Sunday or Monday, depending on the market. Gold, lean hogs. I don't know. I got AIZ down there. That's what's supposed to be down here, up there. TSCO and WBA. Now, the reason you want to have a list of long things and a list of short things is unless you can predict the future, which I can't. And if you can, that's amazing. Let me know and I'll send you $10,000 to trade for me. But if you can't, then you need to have a list of long things and a list of short things because you never really know which way the market's going to decide to go today. You know what it did yesterday. You know what it might do in the future of the overall trend, but you're not really sure day to day. That's why I have a list of long things. So if you look on this tab right here, it says long. This is a list of continuational longs that I want to continually add to and filter out for really good stuff. When it's an up day, they pop to the high side really, really well. And then I'm always building a portfolio of short stuff that when the market sells off, they act really, really well to the downside. So I do this on a daily basis so that I'm always either adding or removing stuff from my list of things that I like to trade. That way, if the market's up 500 points on the day, I'm probably going to be able to catch a decent long move in my potential longs. If the market sells off 300 to 500 points, then I'll go to the sell side of the thing and I'll play the shorts on the only side, okay, on that side of things. So that's how I do it. Now, there's several other ways that you can do this. If you don't have, what's everybody in here use? What does everybody in here use? TradeStation, TOS, like what platforms do you use? I just want to see if you've got the ability to scan for this stuff. TOS, all right, you can build it in TOS. We have a video teaching people how to do it. Wealth Charts has a good one. It's got a built-in one. TradeStation, TOS, Thinkorswim, MT4. MT4 should be able to scan for it. I haven't used that in a while. Trading View, yep, you can do it. TradeStation 10, bar charts, TD Ameritrade. Okay, cool. If you don't have one of those that they're kind of listing off, you can do this. I forgot to tell you too. Also, I give my members access to a scans and pick sheets. Okay, so in the scans and pick sheet, I then also pick my favorite. So in that case scenario, I would rank my favorite on Monday or Tuesday, and I would say, okay, live cattle, ORLY. So This is the new longs. These are the ones I did Tuesday of this week. And these are the new shorts. And then I always highlight my favorite in yellow. That lets them know, like, hey, I like this one. This is the one I'm thinking about taking my own self. Okay. And then what you can do is if you're terrible at scanning and software, you can use this free tool. They're going to pop up at you to death. So just be aware of it. But here's what you do. You go to stock charts and you go to charts and tools. And then you go down here to the right page and you go predefine scans and left click that. And then what you're going to do is you're going to scan down to technical indicators. And you're going to scan all the way down here where it says candlesticks. And where it goes to the bottom where it says Ichimoku patterns, boom, moved above the cloud, moved below the cloud. And I'm going to left click and control at the same time on my keyboard. And now I've got a list of things that are newly above the cloud and newly below the cloud. I'm going to format it, sort it by the exchange, and then I'm going to build a chart in another tab real quick, like this right here. I'm going to go moving average, none. I'm going to go Ichimoku full, simple. I'm going to go none, RSI, none. I'm just going to get everything off of it except Ichimoku. Okay, and then I'm going to hit update all. And now you can see, look at there, ATNM is a brand new fresh long. So now if I go over here and I go, okay, I want to trade something that's on the NASDAQ, if you like that exchange, I'm just going to pick the ones more than 20. So let's go right here. Let's go ALRM. Copy. Put this creature right here. And paste. Bing. Winner, winner, chicken dinner. There's your fresh long for Monday at 86.30. ALRM will probably go to 95. That's a 10 bagger right there. Bill says, I'm a member and I made over $1,000 on ORLY Friday using the cloud. Nice, Bill. Nice. Congratulations, man. Congratulations. All right, so that's how you do this. Now, if you want to scan for the short stuff, same situation. All I'm going to do is I'm going to sort by the exchange. Just say you're just a NASDAQ trader, and let's just try to trade. Let's look at this one here. It says 38 bucks. ACLS. I'm just randomly grabbing them. I'm not cherry picking any of this stuff. I'm just doing it in real time in front of you. There's a decent short. It'll probably drift back down to 36. That one's only going to make you about $3 as opposed to that other one probably going to make you 10. I would do the other one. It's a little bit better trade setup. That's how you do it, guys. It's super simple. It's easy. It's not hard. Now, you can make it harder, and you probably will, but you don't have to, okay? So that's how you can do it with a free piece of software. Now, heads up, they're going to pop up ad you to death, so be ready for it unless you want to subscribe to them. I don't know these guys. I know that this is a decent free software, but you can use whatever tool you want. I don't care what you use, and you shouldn't care what you use either. Your trading application and your platforms are just tools, all right? So now I'm going to flip back to my PowerPoint real quick. All right, we went through some of that live stuff, and we looked at some live charts. So here is a review from Mary. I've taken one trade and made over $900. Here's one from Mark, and I think the way Mark did it was really smart. What's what he did? A few weeks ago, it hit me using fresh trades. I'm using TD Ameritrade and TOS. A few weeks ago, I started using paper money side of TOS, so he's demo trading. And as of the writing of this, I am up $5,354. Now that's worthless because it's on a demo account, right? But I like his approach of what he was doing, up using the cloud and your suggestions. So he's paper trading what I recommended, how to set up his TOS application and scan for this. And then he said, I'm being very conservative and using mostly under $100 stocks, never more than 100 units, and a lot of 10s and 1s. Right? Yesterday, I started slowly with real money in this morning, and I did take a small profit and still watching that one. So he started out just doing it on demo to get a hold for it and to learn how to do it after he took the class, which is a real smart way to do it before you risk your real money. And now he's making money and he's starting to make some profits. So that's cool. Now here's one from Ron. I made over $10,000 in 45 days using this approach and these picks that we're sending them, right? Here's another one from Bill, okay? I made over 9,600 the following couple of days trading symbols that I would have otherwise have never known about. So really what your job is as a professional trader is to figure out where the new trends are or where the well-established trends are and go there if they have a good enough range and you're just always going like, hey, where's the new trade? Where's the new trend? Where's the new trade? Where's the new trend? All right. So that's how it works. So will you be one of my next success stories? Once again, I cannot and I will not make you a guarantee of any kind. There's no such thing as a guarantee in the financial markets, but we are inviting you to join us. So who is this not for? This is not for holy grail seekers that suffer from hopium. So in other words, if you got $1,000 in an account, and if you think by getting this Ichimoku cloud charting secrets masterclass that you're going to make your 1,000 turn into $500,000 by the end of July, that's a very unrealistic expectation of the markets and your skill. That's not really how this stuff works, okay? So if you're a guru surfer, if you follow all 4 or 5 of us today and 50 other online traders, heads up, none of the people on this webinar today are all going to trade the same. And we all trade different time frames and we have different strategies. We do what works for us, right? You should do what works for you. Find somebody's strategy. I don't even care if it's mine at all. Pick one of the other guys. If you like their style and their personality and their approach, test it. And if something works for you, keep it. And if it doesn't work for you, chuck it, throw it in the trash, right? If you can't make a decision, and if you like to make things more complicated, well, it's probably just not going to be a good fit for you, okay? On the other hand, who is it for? If you're serious about making real money in the markets, if you can follow a simple set of rules and directions, and if you know that your success is tied to taking action, you're probably a good fit for this. So here is a fraction of what you'll learn. I'm going to share with you 7 of my favorite setups on Ichimoku cloud charting, trading rules with indicator settings, with checklists and cheat sheets, with entries and exits on all the trades, stop losses and targets, how to scan the markets with Ichimoku, how to filter out the best trades so that you'll never guess what to do next. I'll also teach you how to avoid a crucial head fake that if you don't know about, you are guaranteed to lose money, okay? All right, so obviously it's a webinar, so I'm going to make you a special. Now, heads up, if special offers freak you out, you may want to eject now because I'm about to make you a little nauseous because it's a special offer. This is how webinars work, right? Ichimoku Cloud Charting Secrets. We sell on our website every single day for $4.97. I'm going to throw in 1, 2, 3, 4 follow-up live webinars, which will be on Tuesday, and they're valued at $97. That's a grand total of $982 if I throw in a day in the live trading room, all right, which I will. Your special offer will be only $297 one-time fee, and it's a one-time lifetime access. The deadline is for the first 22 people. You need to go to hubertcenters.com/cloud, or you can call 859-963-3445. Now, I'm going to walk you through some of the trades that you can potentially look forward to, right? Here are some that we found in the past. All right, these right here. PayPal from 252 to 298. Here's Tesla from 450 to 816. There's Foot Locker. It's firing off again. Here's Under Armour. Here's Shopify. Here's CTHR. Here's CPSH. Now, let's go to the charts. I'm going to put this on my screen with my trade station so I never have to worry about it again. Let me go right here. All right, I'm going to grab this link and put it in the chat box for you guys real quick so that you can place your order. Let me grab this thing. I'm having a problem right-clicking this morning. All right, there it is. And I'm going to give this to everybody. I see a few questions, so that's cool. I'm going to give you the telephone number too. And then what I'm going to do is I'm going to spend the rest of the time answering as many questions as I can. And if you have a symbol that you want me to look at really quick and you want my take on it, all I ask is you do it in all cap locks, okay? All right, so there's your link right there. hubertcenters.com/cloud, 859-963-3445. I'm a member and I made $1,000 on ORL Friday with the cloud. Nice bill. How would you handle fake signals like USDH? Okay, let me see this. And how would you handle fake signals like USD CAD? So here's why that's not going to work. So you see how it's 1 day above the cloud? The lagging line didn't go through with you. So on this one, you're going to have to wait in this particular instance. Geo. This right here, it's a one and done. So on this case scenario, I would use 3 or more bars. 3 or more. Hubert, I'm a member. A few years ago, you mentioned that you send alerts. I don't get them. That's on a different service, John. On the HSIC, what we do is we do the scans and the picks like this right here. Let me show you what it looks like. We've changed it up slightly, but you will get a list of, where the heck did I put that thing at? I think I closed it down. No, here it is. Yeah, this right here. This is the scans and picks that is mounted in the members area, and then you can refer to this as often as you want. Yep. All right. Let me see here. Okay. When price is making above the cloud like alarm, ALRM, okay. Okay, potentially long, but cloud extends is red. Is it red? Is it really a long trade? Yes. All right. So one filter that I like to use here is the ADX above 20. So for me, I would wait for this for 2 more days, or I would wait for the ADX to go above 20. We teach all that stuff in the class. It's kind of hard to do in a 45-minute to an hour webinar. There's only so many things I can do in 45 minutes an hour. Do you trade options? I don't trade a lot of options, Charles, but you can use this with options. Tons of people use it for options trading. If you're going to trade monthly options, you use a daily chart on Ichimoku. If you're trading weekly options, you're going to use a 60-minute chart. All right. Thanks, Stu. Apple, let's take a look at Apple. AAPL. Apple is a long, but it's sideways. All right. So Apple is not a great long right now. It's kind of in a box of pain here. You see how it's just kind of going sideways here. I'd wait until it got above 140 before I messed with it. It's not bad. It's not good. It's kind of just sideways. You can see the cloud saying, hey, I'm trying to go higher. I'm just having a hard time of it. NEO. Yep. So NEO is a good long, 1, 2, 3 days above the cloud. ADX is almost above 20. Next target would be $55. GBP versus NZD is a long. I would buy it at 195. Target would be 202. GME, GameStop's pretty easy. So it's in the cloud right now. Leave it alone until it breaks above or below the cloud. So what about the lagging line above the cloud? So ideally, if you're going to wait for a really primo signal, wait for that lagging line to go with you too. You don't always have to do it, but it's a really good way of doing it. BABA, Alibaba, that is, what is it? It's a new fresh long. Next target on this creature is going to be 245, and then after that, 272. SNDL is in the cloud. Pass. That's a hard pass. Leave that alone. Leave that alone. All right. Let me go back over here. Here's your link. It is hubertcenters.com/cloud for the first 22 folks on Saturday's webinar. And Jared is telling me that there's only 12 left. So grab them while you can. I got 10 more minutes before I hand this thing off to Jeanette and we go to the next speaker. I'm trying to get in as many symbols as I can for you. So let me put up my little writing tool here so I can hit this keyboard a little bit faster. MSTR. MSTR is a decent short. Stop would be like 634 and target would be 311. TSLA, Tesla, decent long, stop 645, target 785. Facebook, long, obviously I'm already in this creature, that's why I got targets. 351, 366, 380, and 389. AMC, long, stop 42, target 80. SKLZ, in the cloud, pass, leave it alone. Jared's telling me we have four seats left. MCK is, it's in the cloud. I would pass. It's also kind of sideways. It's not a great trade. I would leave this alone just because it's got a sideways type of personality. SPEV.CN. I don't know if I can do it. SPEY.CN. Yeah, I got nothing. Sorry on that. It's a Canadian stock exchange. Tesla, TSLA. I've already done that one. So I'm good there. DPZ is a long with a stop of 440, target 520. VXRT is a decent long with a stop of 755, target $11. What Saturday webinar? This is a Saturday webinar. Last time I checked. All right, INO, good long. I'd say target 13. All right, MA, MasterCard, decent long with a target of 400 and a stop of 370. TradeWeb's TW. TradeWeb's beautiful looking long. Stop would be 82. Target would be $97. You went too fast on Tesla. What was it? TSLA. Tesla is a good long. Stop would be like 645. Target would be like 768 and then 869. MCD is in the cloud. I would pass. Just wait. PLTR, heads up, full disclosure, I'm long this thing at 20, 22, and 24, I believe. I bought some of it slightly below the cloud as it headed towards it. It's a longer term hold for me. I'm going to hold it probably for the next 3 to 10 years. I am in this as an investment, but it's a good looking long. It's going to go to like $32 to $38. All right, BYND. Jared's telling me we have two spots left. But Beyond Meat is a better long than short. Stop would be 130. Target would be 200. Right now it's sideways. I would just leave it alone. DraftKings DKNG is in the cloud. Pass. Leave it alone until it either goes above or below the cloud. DB in the cloud. Pass. Leave it alone until it either goes above or below the cloud. Leave it alone. AAL is in the cloud. Leave it alone. You meant for those signing up would be a Saturday webinar? No. So how this works is we'll meet every Tuesday at 7 p.m. We'll scan the markets together, and you'll have access to it's 3 modules. It's a very easy class to take. You can do it on a weekend, and then we'll get together once a week on Sunday evening, or not Sunday evening. I'm sorry, Tuesday evening around 7 or 8 o'clock, and scan all the markets together, and then I'll pick you the ones that I like the best, and I'll help you build out a list of longs like I have here for Monday and a list of shorts. And then I'll also highlight and say, hey, this is my favorite. All right. Sorry if I confused you. Sorry. My bad. MP. All right. We got 1 ticket left here and I got 5 minutes left. MP is not above or below the cloud. Wait till it breaks above or below. What charting platform do the indicators work on? Oswald, I don't, it depends on your platform. This indicator is freely available on every single thing out there. Every single decent platform out there has a form of Ichimoku. If they don't, I would change platforms. What is the ticker for? The ticker for, Joanne, I'm not sure I understand. AMZN. Amazon is a good long with a stop of 3,300 and a target of 3,800. GOOGL is a long with a stop of 2372 and a target of 2700. ZB is above the cloud. ZN is below the cloud. Chuma, so I would stay long the 30, but the 10 is a better short. Yeah, and the 2 and the 5 are shorts too. We just looked at them earlier. 5-year note FU. Okay, you want to look at FU? FV. I'll go through the notes again. FV is a short. The TU is a short. The 30-year, the TY, is a long still. It's about to go into a short for you. That would be that trade. And then at US, which is the 30-year for me, would be a target of 156. It's still long until it switched back. What does the D and lean? It just means delayed. It's not a real-time data feed on lean hogs is all that means. All right, Z. Z is in the cloud. Leave it alone. ZM is along with a stop of 347 and a target of 420. And all right, back to signals. ULTA. Ulta is along with a stop of 334 and a target of 400. And PANW is a long with a stop of 358 and a target of $410. All right, I am out of tickets to sell you. I'm going to hand this back to Jeanette If you want to try to order before Jared shuts down the cart, you can go to hubertcenters.com/cloud or 859-963-3445. Good luck. Hope it helps. And I'm going to hand this over to my partner, Jeanette, and you guys are in good hands. Have a great Saturday, and I'll see you guys next week.